Hi, I'm Len Kiefer, Deputy Chief Economist at Freddie Mac. If you're in the market to buy or refinance a home recently, you've probably noticed that mortgage rates have started to track higher over the past few weeks. Naturally, this is leaving some to wonder if the ongoing housing recovery can handle higher mortgage rates, and even giving some flashbacks to the spring of 2013. Back then, we saw housing stumble when mortgage rates rose a full percentage point, fueled by the market's reaction to expected Federal Reserve policies and especially comments by then Fed Chair Ben Bernanke, commonly called the taper talk. As a result, home sales slowed significantly because homebuyer affordability got walloped by the spiking mortgage rates. Home sales so far this year are only just now returning to the level we saw pre-taper talk in 2013. It's important to remember that today's economic conditions are not the same as they were in 2013. Over the past 2 years, the labor market has added over 5 million additional jobs, the unemployment rate has fallen by more than 2 percentage points, and housing markets are generally in much better condition than 2 years ago. Right now, with mortgage rates around 4%, homebuyer affordability remains high despite strong house price gains and a lack of any appreciable income growth in recent years. But rising rates will rapidly erode homebuyer affordability. Most analysts don't expect the Fed to start tightening until the fall, which means the majority of the 2015 home buying season will have already occurred. During the 2013 taper talk, rates spiked at the worst possible time, right at the start of the spring home buying season. Rising mortgage rates have a significant effect on homebuyer affordability. Already high-cost markets become that much further out of reach, and today's low-cost markets get squeezed as well. With tight inventory across most markets, house prices are almost certain to rise at rates above long-term averages. We expect about another 5% house price appreciation rate this year. Mortgage rates are beginning to trend slightly higher, and we expect rates to ratchet higher throughout the remainder of this year. The only affordability factor not rising is real income for the typical family. This needs to change if the housing recovery is to be sustained, and especially if it can ever hope to kick into a higher gear. Thanks for your time. We'll see you next month.